Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss year-to-date performance in the Nasdaq-100 versus the Magnificent Seven. And Mark, that certainly has been a conversation in the marketplace right now. Just how much influence does the Magnificent Seven have on the index?
Yeah, Jill, for sure. Thanks for having me as always. And it's, it's not just their influence on the Nasdaq-100. It's the influence on the S&P 500 and global tech. And these companies have just grown so big that when, one of them has a really good quarter or a really bad quarter, you really notice it in the overall index performance, let alone if there's something substantial happening with more than one company in a given quarter. So before we delve into some of those specifics, I did want to just talk through again where we've been this year, where we are now, about a month into 4Q. So this is showing, I guess I got to update this. I used to call this group of companies FATMANG as the acronym, but it seems like most people now prefer Magnificent Seven. You can see there that NVIDIA has led the way for most of this year, right? The undisputed sort of winner from the release of generative AI and the pickup in terms of investing in AI across the tech sector, up almost 240% year to date at one point. Now it's only up 176% year to date. I say that somewhat sarcastically. Meta still doing very well year to date, up about 145%. That's still pretty close to sort of its peak year to date gains. They had a very good earnings report earlier this week, and people were kind of shaking their heads and scratching their heads a little bit with the reaction to that report. The fact that it wasn't more positive, even though they've sort of continued to blow by expectations, as they've done for a few quarters in a row now. You can see Tesla still up 68% year to date. Amazon now up 52% year to date. And that kind of brings you to the overall index up about 29.5% year to date as of a couple of hours ago. So not quite where we were in the sort of 40-ish% range year to date where we got to in late June and throughout most of July. But I would say 29.5% is still an absolutely stellar year, no matter what you're doing. So we'll see how much that holds up as we get into the final 2 months of the year.
Right. And let's take a deeper dive and take a look at the performance in October.
Yeah, so this obviously is a very different looking graph, very different shapes here with, a lot happening sort of below that 0% line. Tesla is the big outlier here, down 17% so far in October, so far in 4Q. They had their earnings released last week, and analysts and kind of regular market commentators as well all kind of had the same reaction, that this was maybe the weirdest earnings call that Elon Musk has ever done. As CEO of Tesla, he came off extremely negative, extremely downbeat, not just about the fact that Tesla missed estimates for revenue and earnings, but also commenting a lot about how higher interest rates are really hurting his company and the broader market. In terms of, it just costs a lot more to finance a car now than it did a year ago, given the Fed has raised interest rates by about 5% in that time frame. And there's also some concern that, the initial adoption of EVs, whether it's Tesla or other automakers, has started to maybe plateau a little bit, that there was a lot of enthusiasm with that first wave of people who were ready to make the switch to EVs. But they're seeing that, even with a lot of recent price cuts which have hurt margins, there aren't that many new switchers coming on board. And so it remains to be seen how much the current subsidies that governments are handing out, how much the impact of rising oil and gas prices is going to have on that transition to EVs continuing to happen. But just a very, very negative so far earnings season in reaction for Tesla. That's the big outlier here. NVIDIA and Apple have yet to report, but they are both negative for the month so far. You saw Google had a pretty poor reaction to its earnings earlier this week, down almost 7% in total for the month. mainly on the back of their cloud business not growing quite as fast, I think, as people would have liked to have seen. On the other hand, you have Microsoft blowing out numbers pretty much all across the board. Their cloud is really solid. Their other businesses, whether it's Xbox, whether it's LinkedIn, whether it's Office Suite and the new AI tools that they're building into it, those are all coming along really, really nicely. And you can see how much they have stood out on this chart month to date. And then finally, you've got Amazon, right, which was down about 6% heading into earnings last night. They had a very good report. They're up over 7% so far today, beating on their top line estimates, on their bottom line estimates. AWS, the cloud business, was an ever so slight miss in terms of revenue, but there were a lot of positive comments about that business stabilizing from some of the kind of delays and slowdowns in signing new contracts and renewals that we saw throughout most of last year and first half of this year. And they have really, really done a great job in terms of getting more out of their top line in recent quarters, and this quarter was no exception. Their free cash flow was up a ton. Their operating income was up a ton. That cloud business operating income was about 1.3 billion ahead of analyst estimates. Just the cloud business, just the operating income. So some really, really impressive numbers within Amazon's report, even though it wasn't across the board positive, maybe like Microsoft. Seeing that good reaction today, up over 7%. And that really tells you the story. This quarter, there's a lot of dispersion. There's a lot of things going on under the hood, and not every company is up, not every company is down, not everyone's beating, not everyone's missing, and not everyone even who beats is up, depending on the investor expectations that were baked in. So it will be interesting to see sort of how the last two here, Apple and NVIDIA, shake out as we get through the bulk of earnings season in the next couple of weeks.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.